Yeah, welcome everybody. Thanks for coming. I hope you had a great start into the new year. Got some good trades in, got your energies, battery refilled, and are here to learn. Um, it's a pretty small round today, which is perfectly fine. I'd say we just do the usual. Just hit any questions you have about whatever into the chat. Let me know. I try to address all of them one after the other. If you have something you just want to speak up, then just do it. Interrupt me whenever you want. If there's like whatever question and I'm speeding too fast, or yeah, just interrupt me as you feel like, and then I'll address whatever your concern or question is. And all around that, so what's coming from you right now and live? I have some questions prepared from users from before that we collected throughout the time, and I would go through those in case there are no questions on the get-go. So I give you a couple of minutes or seconds if you want to type anything out. Then we can go from there, or otherwise I will just jump right on a question of a user that's already there. The questions so up. So very good question by our user. It's pretty new, sin.c. We're going up, yeah, we're going up most likely. It's yesn't, I would say. Yeah, generally speaking, now that I have Solana and Bitcoin open anyways, I give you guys a couple of seconds more. Generally speaking, chart's looking good. I mean, it's a crazy range of consolidation if I turn out all this shit drawing. I mean, what do you know? We're basically sideways for, what is it, 6 weeks. They're obviously baking more cake below the lows and baking more cake above the highs. They did only even sweep like ever so slightly, as you can see, like this high here. Whoops. Yeah, this high here was swept by an inch just to take out the bare minimum of stop losses. And there's a huge amount of cake here between 95 and 97. Actually, then it only gets interesting here. So yeah, the most confluential numbers for actually rolling over are, in my opinion, even below 100 already, because also the short-term holder realized price meanwhile traveled down to 99K, which is worrying for bulls because, yeah, what do you know? You have like pretty strong resistance here already. Support turns and resistance just as usual. So if it sweeps a bit up, yeah, whatever. But to be like back to bull, you'd need to have confident closures above 108K, and that's not going to happen, in my opinion. So the question is just from how high can one short or build a short position, in my opinion, and I practically do that myself. I started one when we pumped up here. I'm hedging long since today from the drop, but I'm basically only hedging it to oversize if we go higher and for the short sweep. So that's actually how I'm going to play it. And then I just put a stop loss on my long and wait for things to roll over. And yeah, then carry that short for the inevitable downfall. I mean, it can happen between every day and another 6 weeks. They love consolidating above the last prior macro high, low, well, what is simply over here. So above 74, 78. So consolidating here is perfectly normal. Then do last final sweep, which then determines as the dead cat bounce in hindsight, and then roll over somehow, then go down 1 week after the other into the lower end of the distribution range. And yeah, so just more sideways, more scalping, more tinier trades personally, while building a position on the top side. I hope I can trade it up a bit more. I TP'd already a bit, and then, just up and down a bit. And then if they go back here, but not really breaking out, then I will add back. And I can do that back and forth until they actually go there, take all the shorts until they are happy about the liquidity. Because when they go there, they want to take their positions. It's not just, there's always this boogeyman mindset of market maker, boohoo, and exchange are the evil guys. But in fact, it's just big money wants to take a position. And when they go into the liquidations, they either use it as exit liquidity for their own position or to take the position from the same side themselves. Because when you when you liquidate a position like short here, and they go here and liquidate those, that's technically offering the liquidity to take those positions either from a long from here, or I don't know if they are really old positions much further down, then they can still use it here as take profit liquidity, or simply if they want to add to their shorts themselves that they might have closed out slowly down here or in all this range, and then they want to reload up here. And that's how they do it. They go into the short liquidity. And yeah, since the positions get a forced closure, then they can take theirs on that end. So yeah, so what do we got in the chat? One query regarding Tesla. I've been trying to chart it, and of course use the videos to see if I missed anything important. At the moment, I can't figure out why it keeps bouncing in the higher 420s after 431 there. Seems to be an air gap to 404. Maybe you will hear more about it from Sin in his video here today, so I would skip this for now myself, since he's doing Tesla updates directly every day. It's super specific. I'm not charting it as deeply as your question goes. I could start a best guess on why that is. But for Tesla, I'm more a bit back leaning. What about drawing? What's in regards of drawing? I'm not, as you can see, not even on a trend line set up here, just basic horizontal levels that are there for like, the lower ones are there for like 2 years, and the upper ones came in when I sold in December 2024. Didn't change a whole lot, right? So it went nowhere in a year. So I'm not sure about your question about an air gap to 404. That's down here, right? If your question is, and that's what I said today, I guess yesterday also, there's probably going to be a bounce between 400 and 415 latest. If that's not already the bounce, then fair enough, because it would would maintain this break level here because it's not closing below. And just by the looks, it looks also like we are maintaining a trend line here, if not nearby. But again, I guess Sindot will talk about it anyways in his daily update. So if you don't mind, wouldn't go too deep into Tesla specifically. So Chinese Devils asking, so since I'm a newbie trader, which website do I use TradingView? I think TradingView has a web widget, and you can just use TradingView on their website. But as you can see, it's a dedicated app. I downloaded it to my computer, and that's, I guess, how almost everybody does, unless you're, I don't know, on your way quickly and checking on somebody else's computer. But even on mobile, I have it on my phone and it's a dedicated app. So you can just literally Google TradingView, download, make an account. Account is for free. There's even a free package, so you don't need to pay anything. It will limit your possibilities within the tool. That is how many layouts can you have. Layouts are like these things here. And how many time frames you can watch. As you can see, my bar on the top is pretty full of things I watch daily and check on and use for trading, depending on what I need right now. And you're also very limited in the time frames you can use. I have premium. I usually wait for the good deals, which is Black Friday or Christmas, and then there's one again in the end of first quarter or beginning of second quarter every year. So they have usually 3 mega deals every year, and then I just hit 1 year and refill it. So you can add as many time frames as you want and as weird as you want, and that's also on the free plan possible. I guess you cannot even have like 6-hour time frames, as far as I'm concerned, or like 3 days or 24 minutes. I'm not sure. It's a long time ago that I had the free plan. What I know is the amount of alerts is limited. So if I put an alert here and then another here, another here, I can do that infinitely. And I know the free plan is also limited in the amount of alerts you can have. Oh yeah, and very important, which was one major thing why I actually bought the premium initially, is the amount of indicators you can have in one layout. It's endless for me, and I guess on the free plan it's 3 or 4, so that's limiting for many. I mean, if you're just drawing lines and you don't need it. But yeah, as you can see, I'm working with indicators, and even volume is an indicator, and that's like as basic as it gets. So yeah. Which one is the one you are using? It's the native trading view. It's nothing special. That's okay. Just ask. I mean, there are different levels of newbiness. Everybody started eventually. So it's just, again, Google Trading View, download. The website is simply also tradingview.com, you cannot miss it. And if you register there, log in, then you should find pretty easily a download button. And then you log in once into your app so that it is also saving all your profiles and charts and everything, no matter where you log in again. All right. And if there are no other questions, then I would just go on with some back to basics, basically. I mean, if you were hoping for some dedicated charting, I can do that. Hit me up if you want to know something specific about Bitcoin, Solana, or whatever. But otherwise, I would just go through some general questions again. So, for example, and that's a pretty good question, a user asked, OPQA Space asked, for someone starting a chart from scratch, let's say with Sol, which major timeframes would you recommend starting with, and how far back I look on each? Yeah, that's partially a very philosophical question, because obviously you can uh, chart as many timeframes as you want and see if you get confluence on specific levels that would justify a trade one way or the other. As you can see, I have like I can't start generating number of lines on my chart, and they all mean something. And as you can see, this highly congested area with a bunch of break and origin levels on the daily and weekly all hit up here. And what do you know? It has been like major resistance 5 times basically, even during the downfall. Once they went through it, it got retested. So 1 test, 2, 3, 4, 5, and the 5th one was recently. So what I personally do for my general charting overview is I use as simple as it can get for an already so much drawn on chart for daily scalping or swing trading or whatever. I stick to weekly, daily, and 4 hour, which then also explains the colors to you if I do. So light blue is like daily trends, orange is 4 hour, and red is weekly. And yeah, that's at least how I draw out my charts. So if we would start that over from a fresh one, why not do it right away? So yeah, it gets very crunched here. If I have like if I am in my 5th layout, maybe I can use this one. First of all, for what charts to draw on or what price feeds, usually recommended to use either BitGet perpetual mix contract. So you can read it here on the top, BTC USDT perp perpetual mix contract from the platform BitGet, or where I do it, same basically perpetual contract for Binance. I have them both because sometimes if candles are closing like a doji, for example, like this one here, not a perfect doji, rather this one, not even that, then I can look on the other price feed if it's the same closure there, or if it's now there is a distribution closure here, maybe it's on the other feed an accumulation closure. And then I usually ignore them because then it's a bit undefined for me personally for what relevance has it. But in general, you are good to draw on both. And Sin.C uses mostly the BitGet chart. So this one here and this one here. Because yeah, that's just his preference and where he gets the best precision on. And you can find them if you go to the plus here and then just type BTC USDT and then perp. Then you already get the perpetual contracts, and then you see BitGet here, and then you can add it and use it. And why is that? BitGet tends to have like the best order book cleanness, same as Binance. Meanwhile, Binance catched up to it, but a big problem for other feeds is, and that is pretty easy to show why choosing exactly these ones for charting. If I go probably to any of the other random 6 feeds I have here, you will probably see very quickly some candle displacements. And what is a candle displacement? It is basically the open and the close of a candle are not matching. And what do you know? We already see multiple here. So even it is ever so slightly, as you can see, this candle doesn't sit perfectly on top of the other. Here it is more easily visible. If I zoom in, it gets more visible. So the closure of this candle is not on the same level as the open of the next one, and that's the candle displacement. There's more to those things, but drawing out charts, that's not pretty cool, knowing that the order book is not good. Same as like here, you have a tiny overlap. It's a minor detail, but many of times it's only about cents or a couple of $. as far as Bitcoin is concerned, for precision, if a trade is valid or not, if a closure is that high or that low, and then you for sure want the best precision. So here again, there's like a step down, closes here, and the next one opens up here, and that's a difference of, yeah, just about $7. So not very precise, and you will not have those on BitGet because those candles opens and closes pretty much always match, and it's also pretty much the whole reason why you rather choose those feeds to draw for your own chart. So what do I have here on this one? That's a macro overview. Let me check. Am I using this? Barely. I can ignore. Yeah. I don't think I have the fourth layout in use. Okay. Just remove this one. So where could you start, if anything? Already helps to start at the weekly, then go to the daily and to the 4 hour. It also always depends on what you're trying to achieve. If you're looking for like a general chart overview, like from a big zoom out level, then you probably don't want to start from the 50-minute. But if you're just looking for some scalps from the recent range, from the recent price action, then yeah, then that's what you're gonna do. But you can then also miss out important levels that are coming from prior history. So I would recommend at least to take your time for the daily and go for the last major low and the last major high, and then start out drawing from there. I mean, you can exercise this through more history, but in my experience, it doesn't bring more value to the charting outcome and the claims that those lines then make for trend lines. Not true so for the break and origin levels, because on the other chart, if you remember, I have like 20 lines here in this area, and it keeps rejecting also. And that's mostly due to this range from this side here, because that generated all those lines. And if I wouldn't have taken it, drawn out those, then I wouldn't have seen all this resistance here. So, and also those here. So it makes sense for certain levels, for break levels, not so much for hold levels. For break levels and origins, it does. And then see how much the support resistance flip goes, because that was support here, turned into resistance again before it got caught, turned kind of into support here, then bounced higher anyways, bounced on prior support, and then would, falls back into the support. Even only took like 1 day to fall through that. That even surprised me when it happened at that date, but it is what it is. And yeah, and now it turned all that support, or is turning all that support into resistance, which is just another reason why I'm not such a big believer in mega rally from here and breakout and new bull. There's just too much history of where people want to exit, and too much pain currently for all the short-term holders. But yeah, enough of the rambling. How would I start charting this out? Basically, I start usually from the top, and then I take the ray tool here. Then I go to the last highest accumulation candle, so the yellow one are accumulation candles on my layout or design, and the blue ones are distribution candles, so selling candles. And you go here, and then you just anchor it on the highest wick. Then you start cycling through the candles. So what is cycling? Cycling means you wander around with the second anchor from the first anchor you got here to the next accumulation candle and put it on top. And then you look Okay, I have a trend here. As you can see, it even rejected here. It tried to go above and then closed below and rejected again, and then it claimed it. And what do you do with the trend line now? As soon as you get a full body accumulation closure above this trend line as it is, then you move the trend anchor from only the second. The first always remains because that's your trend. And the second only defines where does the trend go along from the top. So we have this candle here, which means we move the second anchor from where it was before to the top wick of this one. And then you do this again. Is there any candle above this trend? Yes, there is. Full body. Only that counts. Sometimes you have to zoom in really hard, and we probably find an example soon enough. This one is pretty easy to spot. The whole candle body is above the trend. So the wick doesn't matter for what I just explained, only the body. And the body is completely above this trend. And then you move it. And eventually, what do you know? We have a major trend established, and the next ones couldn't close above and kept rejecting against it. And then basically Bitcoin kept dying against this trend. And then, yeah, then the algos and traders have their major trend running. And there is this one. Now you can choose. Technically, you would cycle again. So cycling means cycling through all the candles that have a full body above, like this one here is the next one. This was like a very sneaky and very mean breakout to a lot of algos and people because, as you can see, it held from October 6th all the way down here to December 9th. Then got the distribution closure above, which doesn't count, but then the next one closed an accumulation, and that was like, for a lot of people, like, yeah, okay, now long, because now we got the breakout, and what do you know, then they reversed it after the trend got moved. So we move it again from this anchor here to this one, because that is a full body closure on top. And as you can see, it was maintained for many days after, before then it traveled back above again. And technically, all these candles are not breakouts. This candle sits with its full body above it and goes very high, kind of, but it's still closing in a distribution candle, so it doesn't matter really. And then the next one even falls back below it, and as time goes on and as the more you exercise those things, the more you will actually find all those fake outs and realize how many times they fake out breakouts in either direction. In this direction, it's a downtrend fake out, and obviously you also have that from the top bottom to the top side for uptrends that they close below an uptrend, but then every next candle is an accumulation candle, and then you see they never lost the trend. So here again, you move the trend to the next one. I speed up a bit now. This one is also, we zoom in a bit. It's kind of obvious, but I still zoom in a bit. Move again. This corner doesn't even touch, so this moves again. And now the next one is very interesting because I have that on my chart also. As you can see, the corner touches this trend ever so slightly. So the trend does not move. So this is still the major trend. And the interesting part is where with all the resistances that we know that were above here, it rejects. Now it can also use this trend then as support from a lower price, which makes those things really cool and very interesting to have on your chart. Because a lot of people will have their stop loss below here and got caught, or here or here. But yeah, actually everything is all right because the breakout, even though it was not confirmed, is still there price-wise, and the trend does not move, which is actually more bullish. And now it gets a bit more confusing maybe. Why is that bullish? Because the trend did not move. There's no extra resistance coming from this trend, you know. Remember when we got back here, when we had it here, the trend moved to this candle, and then this trend became resistance all the way down here throughout this consolidation before it actually then lifted off from the other supports down here. So if this trend stays here, then it can use this trend as a support. And it did so, even yesterday, almost to the penny, which is pretty cool for scalp. Even if you're just interested in like a $700 move or whatever happened else here in the candle, first trend taps are usually very easy to trade also. Second or third ones can be a little bit more tricky, or you should be a bit more cautious, but first taps against, I would say almost every line even, are usually then also instant trades and profitable. And here it swept a bit below it. You probably heard that during a lot of videos from Sindot, that they are about to make a trend sweep or whatever, and this kind of was one. And funny enough, if this candle closes in distribution again today, the trend still stays, which is even again, ironically, believe it or not, more bullish. Because if this one closes in accumulation, and let's pretend now we know that this will be the highest price, then it would move again here, and then it would act as resistance. It would not, and that's where experience and exercising comes in again. If it closes high up enough, like here, then the next candle would open on the other side of the trend, and then it can immediately use it as support again. So much so as theory crafting goes, how trends work and why cycling through them can be interesting or helpful. So now we got the, yeah, sure.
Can you do me a quick favor? Hey, it's Apone Savage Toe.
Hi, Apone.
Hey, brother. Will you grab your watch list and just pull it to the right a little bit more so it's not occupying so much on the screen so I can just see your chart a little bit? Oh, okay. Beautiful.
Is that easier? Is that
back
better?
to mute. Yeah, back to mute I go. All right, thanks.
Unfortunately, I cannot make those smaller. This is already limited by TradingView, and I don't want to work with layouts. It's super annoying.
Yeah.
So if you don't mind, I hope that's enough space.
No, it's totally fine. Also, I don't know that I've ever seen anywhere else but your screen these other layouts that are cascaded behind this particular one. How do you do that in
here on the top
trading
side?
view?
You have like
infinite
options. So that's my main charts for all price feeds. I have this one. So that's like single window layout.
Mm-hmm.
Then you have like duo layout, duo window layout, left and right, like this. And it will even save what you have painted individually on all of them. You can do top to bottom.
When you've just reduced them instead of being equal size.
Yeah, exactly. So if I choose one that I never used, like this one, then it will per default just evenly distributed.
Yeah. Okay.
And
that makes a lot more sense.
Yeah, because when I'm working with two charts and I'm doing like this, okay, what is my main chart doing? And then, okay, I'm working on this one and find answers to questions that I don't even know yet. And then I find questions and then I find answers again.
Very helpful. Okay,
back
thank
and
you.
forth, So yeah, so now I'm on the fourth layout because I didn't use it, and the other ones are in use with things I'm observing. So so now we have the daily downtrend from all the way up here. Usually, side note, that's a mix of personal preference and actually technically relevant. You can leave it as that, and it would be perfectly fine. But I attempt to maintain the major trend that I have had before, from the one that was catching all the tops and that was then maintained a lot. This one here, I usually keep this one myself because it's obviously relevant to algorithms and traders by a mile, like big time. Maybe even move it to this one and see what we get. Yeah, would be okay, but I'd actually prefer the prior one. And then when a lot of time passed, I can guarantee you that I will get a trade down here because it's simply a major trend. But yeah, if you do that with every line, then maybe you end up with a big mess and don't know anything anymore and cannot have any idea what your chart is actually telling you. So not having this, fine, fair enough. I just tell you why I do it and why I have it actually. And the current daily trend would be this coming from the top, which is this here. Now we do the opposite side. The last major low is basically the very recent one from November. And then we find, oh, color it, sorry, make it daily. I have templates here. If you don't know how these work, stay tuned because we're about to make a chart organization video to answer some basic questions, how to organize your charts, and we'll publish it then. So I just suggest right now that everybody knows how these templates work until this video is out. And we draw the daily trend from here. So we go from this week to this. Oh, it didn't take my setting. I'm sorry. I'm rambling but not clicking because daily trends are light blue for me and 4-hour trends are orange. So I take the lowest wick again as the initial anchor and then cycle through again. I go with the second anchor through the next wick of the next candle. And then it works the opposite way. As you can see, it even rejected already here. So it's very, very good and very interesting to have those things set up properly on your chart because you can even get tiny scalps on it. Usually the first tap works like a charm and then you gotta see. So now it works inversely. Full body below the trend because it's an uptrend. So this candle here is the next weapon of choice and the anchor goes to the lower wick. And then we look for the next candle. As you can see, it got even maintained on this tiny top side bounce here before closing just in a way that the next candle can actually have its full body again below it. So what do you know? We have a distribution closure here. So we move the trend over here. And even the next one is perfectly, if you're not sure, just zoom in, don't be shy. Just make sure you have the right one. As you can see, the corner does not touch the trend line, which is important. Only full body hard closures, and that's what a hard closure is. Only a hard closure for an uptrend below the trend will move the trend like this. And what do you know again? Then we got a mega dump. I guess was enough for the algos to say, okay, we had 1, 2, 3 losses of trend. Time to go a bit harder on all those losses. Actually, they didn't even take the effort to hit it again, and it's the next day closed basically, opened it basically, and then it just was a free fall. But that's pretty good because this uptrend to maintain is almost impossible unless you're going parabolic and are super bullish, which is not the case. So now we got a less steeper trend to work with. And also you can see already here, I have this trend actually on my chart because just from different other measures, this was kind of building like a bear flag or like a bearish pennant. And yeah, shorting this was fun down here and then losing it and going a bit lower even until it hit support again. Was fun enough to trade, and I keep it for the sole purpose of for the sole fact of it being the initial part of this new range creation. This is the first new major uptrend the biggest lows. It was decisive when it got lost, and then it got also respected after it got lost. So by the rules, I will move it, and I will do that now, but I just keep a second line on my own chart because as you can see, even here, it got rejected again, which gave me another confluential point of actually shorting this and not thinking, okay, it's gonna shoot right through everything. So let's do this. That's the line. Technically, this body here is fully below, so it will be moved. And now this is your running major trend, which is pretty easy to maintain for price in Diagos because it's not so steep. And as you can see, there was not a single distribution candle closing below again. So this is our final uptrend on the daily going from here at the moment. And it was maintained even throughout the low volume and holidays. It fell a bit below, it closed even below, but it got reclaimed. So that's not a loss, or it is a loss, but not a break of that trend. And so it does not get moved because the candle sits on the trend. Then it got claimed, got lost again. So a lot of fake outs, you know. You can imagine how many people were going mad short here. Like, okay, oh no, the trend gets lost. We will go so much lower, and then it goes up again, then everybody longs, and then it goes down again, everybody shorts. And yeah. Market is there to take your money, and that's pretty easy things on the chart to see how they take the money from the people because can be confusing and is so too many and eventually bounced basically on the yearly rollover when all the major time frames locked in 6 monthly, 4 monthly, 3 monthly, 2 monthly, monthly, all those large time frames which were super relevant and closed super bearish and only confirm what we already know, that we're going to the bear market or are already in the bear market. It just didn't fell more now. The bear market starts at the top, so basically from 10 weeks ago. But you have bounced in between, and now we're bouncing from all the shorts that accumulated here and took them all out. And yeah, well, you know, it just bounced like a charm, and I added here to my long. It's 89,325. I even wrote when it happened, so just about here. Sometimes I like to take the positions a bit earlier because sometimes they tend to not distribute back to those trends. Same as here. If you waited for the trend hit on the daily solely, then you wouldn't have taken your entry, and same on the short side. It's enough for me to have like the idea that it will happen, and then I usually start to layer in. I'm barely ever be like, okay, all position here, all position here. It's more gradual layering in from levels that I deem important, same as all these wicks here that we will draw out later, and then hit a bit more money down here. But yeah, fair enough. If you had the most greedy entry idea and you waited for the absolute low, then you have the best entry that you could get today. Also profitable, fair enough. And less risk, right? So if you keep layering in and it then falls out, yeah, can also hurt at times. But yeah. So, did you try to say something or somebody? I heard a voice. No? Yeah, Kavix. I'm just going through the daily right now to start somewhere and to explain to beginners especially where to start. So let me add that one trend line again for the completion, for the full complete picture. And then I usually would go for the weekly because that's also super relevant. And the idea never changes. And that's also where colorizing your trend lines becomes more important, because now you know, or I know, light blue are the daily trends. If I go to the 50-minute, I can zoom in a bit more and check what happens and then see, oh, looks like that worked like a charm. Huge volume cam also in at that moment. It's like the perfect idea of a trade. I already start layering in here and added more here, and now my average entry is down here. Doesn't hurt. Who gives a fuck? I'm not here to 100x those trends, but position myself especially to hedge against my short from above. So when the price travels higher, then I can oversize my short because I'm hedged long, and then put a stop loss on my long here at entry and not care because, yeah, major trajectory is down. So I'm just looking to oversize shorts and not longs. So back to the trend line question. That's the weekly time frame. So same procedures every year. Go to the top candle. Actually, you would start here because trends are started with 2 consecutive candles, and you have, yeah, you have 2 here. It's a bit more difficult. I mean, in the end, it is this one, I know. Let's cycle through it for a second. Yeah, can already see that it was resistance also. Then it would move over here. Give me a moment. Then it would move over here. Yeah, in the end, it remains the top candle because the weekly is just one time frame, and you go best usually by the highest accumulation week on the highest recent price on the last major top, which is this. That's also where the major trends are running from. And yeah, then you do the same. You start with the top wick of the highest price point, go to the next buying or accumulation candle and put the second anchor on it. And then you colorize it as you want. For me, that's like a, what is that? Burgundy red. Just a very, very pregnant version of red that's not aggressive. That's why I chose this one to have like weekly trends in this color. And yeah, it was not moved even once because until this candle, because this one closed on top of it. This closed in distribution again. So technically what could have happened, and that's where charting becomes very interesting as you study them more. This looks like a breakout. Then it closes in distribution, and then it could have gone all the way down here, and it would not be a big deal in distribution. Then go even lower, and then have the next candle only up here and do this, and then technically there was never a breakout and a move of the trend. Didn't happen. In this case, we have a full body of this weekly candle over here. So we move the trend also from there to there. And what do you know? Now you have like a weekly and a daily breakout setup at this case. So very, very easy to long those things as you slowly start to draw them out. Because when I draw the uptrend weekly also now from the lowest wick here, if I'm going too fast, please tell me, then I rewind. So that's the initial weekly uptrend. Then we have a full body closure over here below that trend, so it moves. So what do you know? You have like a weekly uptrend and a daily uptrend sitting on top of each other. And you have a weekly and daily downtrend where the next candles already sit above. So now it's for people that don't have those lines on their chart, and as you slowly draw them out and build into it, now price action maybe makes more sense only going by these 2 time frames already, and that doesn't even include 4-hour, It doesn't include break levels. It doesn't include origin levels or fib ranges. You can do all sorts of things to complicate things and justify your positions. But even if you only have had these two things, like the daily and the weekly, then this was like, yeah, a no-brainer long. Getting out of this long is, I don't like to speak in 100% certainties, so let's call it 99.9% chance that you get out of this long anyhow. If you entered here, even here, close enough. Doesn't mean it will moonshot and will get infinite upside. It just means how much risk did you take when you entered the position. And the risk was extremely low to do any long here because of only the two time frames just presented and explained. So yeah, that's the daily and the weekly of the recent ranges, and then you can do the same with the 4 hour. It doesn't change a whole lot on the 4 hour. The idea remains the same. I will do it once now for the downtrend, just so you guys see how the cycling works again. I zoom in to the very high. The reason the trend lines are sitting here and are like weirdly displaced is because how the different time frames resolve into lower time frames, because this is a weekly and the weekly candle starts somewhere over here. So all these price actions that happened within 1 week in all those 4 hour candles are crunched into one weekly and result in that highest wick over here. But yeah, when you zoom in, it has to draw it somehow, and then the initial anchor will be set of where the weekly actually starts, and not, yeah, it will not move it over here, because on the resolution side of things, the weekly starts here, and that 4 hour is only within that weekly. So I hope that makes sense. If not, please ask again. It's just a resolution thing in the end. So 4 hour, you start at the highest accumulation candle, which is this one here. I change the template to my 4 hour template, which is then orange for me, kind of. And then the process starts again. You take the next candle, wick, put it on, check for another candle that has a full body closure above, which is this one. And then you can already see how it died. And yeah, I actually shorted this. I didn't short it as low because what the fuck? I guess nobody expected the 20s. What was it? $26,000 dump. No, I didn't take the full money. I actually TP'd somewhere here because of support. Whatever. As you can see, you got your trend. It moves along, gets rejected, hits it again, and then yeah, escalates extremely, extremely crazy. And there were narratives back then, like glitches and blah blah blah, and bad actors doing bad things. But if you haven't had read any of this, you would have shorted this anyways. It didn't matter if there was a glitch in the matrix or whatever. Yeah, the glitch maybe caused more panic selling and glitching and thin order books, and you would have had like huge profits. But same as Wiggle Puppy just told me earlier today, he's shorted Zcash. I don't know if with the ideas that I shared throughout the last days in the chat or with his own charts, doesn't really matter. He shorted it for probably similar ideas. And yeah, then the founders resign, and then sometimes you're a bit lucky. And then you have the narrative for big money just nuking the price, taking some longs out, and then reaccumulating before they drive it up again into the shorts that are late. So yeah, sometimes you also have a bit of luck in the acceleration of your trades, because that was a short, but the expectation was not Not by any means. One day, $26,000 nuke. Either way, I'm rambling. Sorry. So we have the 4-hour trend here. Even failed to reaccumulate back up here, then overshot it. So I shorted even this because that's usually very scammy and very fake. So it was also very easy to short it with all the resistance over here. Either way, it gets moved by this tiny candle here. So we put it from this anchor to this, or we put this anchor from this wick to this one, and then keep cycling through. We have this candle, then this candle, and then this candle. Oh yeah, and by the way, you always move from the left to the right, because let me go back 2 times. What did I just see? So because you have like 2 candles sitting above it, you're just moving one candle after the other from the left to the right from where your anchor is at the moment. So now you're going from this to this candle and not from this to this candle, just to make sure. Just one after the other. And then it's below. Then you go to the next candle and the next one. So this is actually a very good example of kind of a doji. And if I was drawing this one out, I would probably check the other feed. And now I have the history, and it doesn't matter for the next cycling because it will result into the next anchor will be the same anyways. But at that moment in time, I cannot know that this is happen. You can suggest it or guess it or whatever, but you don't know. So when this candle closes, I would check the other price feed and see, is this also an accumulation closure or is this distribution there? And if this price feed shows something else than the other, then I would not move the trend and ignore the price action for the moment and not act up on it, because then it's just indecisive what's happening. But doesn't matter. A lot more happened already since, so we keep moving the trend. Even used it then as support to bounce higher. So you see how those things can work even when the price is already high. Move it again. And that's already a final trend. So you can already see how beautifully all those time frames interact and why it also makes sense for me personally to use at least those 3 time frames. Nothing wrong about it if you use more, until you have a very messy chart, maybe. That you can see that all those lines influence the price and how the price reject against it, because you have a weekly, a daily, and a 4-hour trend. Then here, and yeah, there are just more reasons for the price to react. And as you can see, what do you know, it just then dumped. So anyways, the anchor is here now. Do we have another 4-hour candle above? Ah, look how beautiful this one is here.
Blue,
Yeah,
can I have you do me a quick favor and go back
never
to
ever.
the top of that 4-hour do it or else you've seen?
This is this one here.
If you can zoom it, yeah, zoom in just a bit for me, okay? Let's get real nice and tight in there. So this range is a 3 candle accumulation range, right? And the first
one here?
candle's got wicks on both sides. No, just on the left side
one?
of the correct. So it seems to me like we've placed the 4-hour trend on the middle candle in
Yeah.
that 3 candle range, right?
Mm-hmm. That's correct, sir.
Help me really quickly and remind me why we placed it on that middle candle instead of.
Yeah.
Go ahead.
Now I get it. Because the second anchor is only its only obligation is to be moved when you have the full body closure to that next candle that does that full body closure. So if I go back more steps, sorry for the jumping around. So that was from the cycling. We eventually landed here, and the next full body candle is this one. So the current 4-hour trend moves to this candle, and then again the next but second. No, it was here, not on the middle one. It was on the left one. But yeah, it was so close. It looked similar. And then the next full body is this one here. So the trend moves to here. And then the middle one even used it as rejection. And this third one shot over it, but yeah, it couldn't fully close above it. And then actually,
Makes sense.
yeah. So it
So
never
the
moved
first,
again here.
you're placing on the first full body candle after the break.
After a hard closure, exactly. And a hard closure is the complete body of a
The
candle.
complete body of the candle on the
Exactly.
bottom side for a short, on the top side for a long.
Exactly. And
Got
it's
it.
only about the thick part of the candle. The wicks don't matter. Only the body, the candle body is relevant for if you move a trend or not. Because as you can see, we have many wicks here against the trend. And it doesn't matter if it closed above here or whatever. It's just the body sits on that trend, so it doesn't move. Same here. Here it is already below, so it cannot move anyways. And then you have to go all the way to the right to find the next one. I shorted even this, and we talked a lot about this short between 106 and 108. So yeah, very beautiful how these things operate. So I have to scroll a whole lot to find the next anchor. You're welcome, Apone. So then this is this one. Trolled probably as many people as the daily breakout, because what do you know? A daily breakout starts at a 4-hour breakout, so it makes sense that at the same place we have a 4-hour breakout. So this the anchor moves again from here to this candle down here. Troop. And what do you know again? It got rejected and rejected and rejected 3 times. So plenty of shorts to grab if you organize your chart. Same as longs. So then again, we have the next candle. This one sits on top. That's a good example again for your question, Apone. This candle wick here hits the trend and goes through it, but it's just a sweep. What matters is that the full body is above the downtrend, and that's why it is moving.
Hard close is something that I was aware of and have been practicing charting, but the first full body candle concept is not something that I kind of had on the front of my mind. I had always been, for example, where you just drew the 4-hour on the first candle in that small 5 candle range. I would have been drawing that at the top of that distribution candle.
So you would have put it here?
No, I would have put it at the top of the yellow candle. And then also conversely, when you zoom back into where you've anchored it now,
yeah.
If we go into there where it's anchored currently, down there, down there. Yeah, I would have done the same thing. I would have done the same thing there. And as we moved forward, I would have put it on the top of the last candle in that range.
So this one?
So yes.
Yeah, no, that actually stays here.
And it stays there is what I'm looking at, and I'm trying to just rectify the two of those things. It's all good info. I mean, there's obviously a precision that I'm lacking, so I'm trying to just get as into the weeds as I can on all this stuff.
Yeah, 100%. Keep shooting at me. I try to answer as best as I can,
Yeah, for sure. So just to recap, so I can make sure to cement this in as well. On a accumulation candle or range, 2 or more is where we're drawing the trend. It can and it needs to be 2 or more, right?
Yeah.
And so the top of the wick in any range is going to be the anchor.
Yeah, usually it is the most left part. Let me try to find an example of why it then can move to the right side. of the rollover part of the top side. Is that one?
So, for example, right where you're at right now, the highest candle that's straight in the middle, there's three. There.
Yeah.
So, like, would we have ever drawn the 4 hour at some point in time back to where your current anchor is on this new trend line that you just established? That's the middle candle.
Yeah.
And if there were three candles, it would always have made sense to me, at least because perhaps I'm very ignorant, that third candle would have been the only eligible place to place the trend line, not that higher wick in the middle.
Honestly, I tend to start to the most left part of these ranges, so it would be even this one.
Okay.
And I show you how that then works, because then you can go through it and then it makes sense again. Because then I know where you're coming from, so bear with me. If I start from this one and go to the next candle, it gets anchored up, right? So there cannot be another closure above. So what happens then? This new candle becomes my next main anchor, because obviously, yeah, there cannot be a closure. I want to draw a downtrend, which needs to point down, so less than 90 degree, like less than horizontal, sorry. So when I'm drawing up, then I'm moving that main anchor. So I delete again, then I go to this candle and do the same. It's above horizontal or 90 degree, so I'm moving again. Then I land here at my main candle, and then I land at this one. And then I can see this one. Whoops. Sorry. This one here has like a full body closure, so I can move it to here. I could leave it for something else different, and if we go to the right side.
Let me pause you for just a brief moment. Where you just placed that last anchor, the very last anchor you just placed, what would have prevented you from placing your larger 4 hour at some point in the past when that was the relevant candle? When it became broke, you have a 4 hour gold downtrend that's just above this one, the initial one that started this conversation. What would have prevented you from placing it right where that anchor is right now, initially during that space and time on the 4th of December or whatever?
Well, the simple fact that the trend was sitting, I guess it was something like this. And there was
even before that. Yeah, drag that anchor to where we just placed it, next to where that.
Like
Yep.
this?
Was that at one point the trend?
No, because when we go much further back, then you can see where the 4 hour came from. Sorry for.
Oh, it would have been clipped earlier than that. Okay, yeah. So that's where I missed that one part, and that was all my bad.
Yeah, no worries.
So yeah, we would have been clipped from that earlier one over there. There we go.
See? So
trying to follow along on my.
This is a trend where it's currently sitting at, and it doesn't change because there was never a 4 hour closure above. Obviously, you can draw your local things, but the base explanation trying to get out here is how would I approach and how do I actually do my own chart also, right? So I go from the very top, from the very last major top and the very last major bottom. I mean, it's discussable if you choose this one or not, and you can, and you will find trends here, fair enough. But for the local uptrend, I'm trying to draw out. I'm using this low here, and for the last local downtrend, not local major, I'm starting here. So then, then the 4 hour is currently anchored here for its downtrend, and since there was no interaction even with this trend, there's also nothing to move because only this candle here is relevant to moving the trend because it hard closed it.
Makes perfect sense.
So yeah, but it doesn't take away from you to draw out this anyways when you are locally acting, because that's just the major trend. And if you're Skyping or whatever, Perfectly fine, yeah. I can only support exercising it more and also try your best locally. And to follow up on the thing I tried to explain previously, if I start to draw this out locally and I start from the entering of the top range and want to draw it out and go from here to here, it's above 90 degrees, so it cannot be this. I have to make this my main one. This is also pointing up, so I have to make this my next main one. Then I go from this being the first anchor, the second anchor. Now I have this candle. It's pointing up again, as you can see. So it cannot be a downtrend. It's obviously an uptrend. So what do you know? I move the major anchor again here. So, and then I can start having a downtrend, and then you can already see how it then actually is a downtrend, you know. So if you're asking how can I find the right candle locally on such thing, then that's how you do it. You go at the start at the very left, where you have the, like you said, at least two accumulation candles where you start a downtrend from. And then you do it just like I did. You go from one candle after the other, and eventually you land on this one that I just had. And well, you know, it is like the perfect downtrend locally that you could have shorted alongside with, because there was no hard closure above that downtrend again. And then eventually it was used as support and bounced higher. So, did I move it yet now? No, I gotta go back, sorry. So one more time, take the second anchor from the macro downtrend of the 4 hour, move it to this one. Oops. Then you can already see how it is used as rejections, after rejections, to short it. And that's the cool thing. If you manage to, I mean, it moved here. You don't know that this is resistance here until it moved there from the other candle. But it is resistance as soon as price gets here, and that's a fascinating thing, how fast those things act, actually. As soon as that trend got moved here, it is immediately resistance. Same idea of why the daily trend actually is more bullish at the moment if we close red, because the trend does not move and it can still be used as support. So yeah, it will not get moved here, but it will then get moved over here to this candle. Failed to hard close it over here because it closed above it, but then only closed in distribution. Distribution again is back below. And where's the next one? This tiny bugger here. And that's like the perfect recipe for make or break. These are when you read in chat like, yeah, chat, price has to make a decision because it's squeezing, it's crunching. Then those are usually the setups we're talking about. I mean, this is a weekly trend and a daily trend, so a 4 hour has a very limited chance to break those initially because they are more powerful, and what do you know, it escalated pretty intensely above and jumped up. So if you're in such squeeze, be aware of what time frames you are actually squeezing. And I'm sure if we draw the 4 hour, and if I remember my chart right, then the 4 hour trend is also moving alongside here. So you're basically having 4 hour daily and weekly fighting against the 4 hour. 4 hours losing, boom, mega pump, falls back down still, but who gives a fuck if you longed here or down here anywhere? You still got all the profit. So 4 hours here. This one is no, this one here is the full first body closure. And that's also then where it gets interesting again. Another good example. Crazy squeeze here. Price has to make a decision. Daily and weekly wins the fight against the 4 hour. Pumps really hard. Gets a full body closure above. Trend moves. and immediately becomes resistance. I mean, just by the look of the pump, it is scammy by design, but also technically, as more as you exercise those, drawing your charts out and follow the price and follow how the trend lines move over time. It's very fascinating how immediate those things actually are, because when it was here before, it had had just all the room in the world to move freely uh, until it hit like probably the break levels from over here or origin levels, and then it got rejected. But nonetheless, it closed the price here, and it sometimes is just a matter of minutes that the 4-hour or daily closes like this, then the trend moves, and then it immediately turns into that rejection point and causes in this opposite direction back into support. Fakes below all the daily and weekly. Not a big deal because the 4-hour cannot break a daily or weekly, so nothing happens over here. We are drawing the 4-hour out at the moment. So we keep going. Almost at the goal of the recent pump. This one is the first with the hard close, being a hard closure. Move over here. Then this one over here. Then this one over here. You can see how good it works, right? It kept rejecting under the daily and under the moved 4-hour. It didn't reject a whole lot, but there were definitely people taking profits on longs or entering shorts until they got trolled because it kept then pumping through. And we know it moves over here, and yeah. And this is again chart porn. The 4-hour moves to the very top of this pump, immediately turns into resistance, drops a bit below, tests it again, and yeah, you already know when you see like something like this, that's a short. Even if you didn't take this one and were just patient and see what happens, then this was the obvious next short, because other algos or other traders and algos see this, it gets respected. There's no intention to go higher. It already swept the stop losses above the highest wick. It hit all those break levels, so it goes on and on. The more you draw it out, the more you say it out loud, the more you look at it, the more it's like, yeah, okay, now it's super obvious. But I get it. If you're just learning and doing it yourself, it might be super overwhelming. So yeah, keep shooting questions and feel free also in the daily chatter. No worries. So yeah, now we have the downtrend for the 4-hour. All the macro downtrends are there. 4-hour, daily, weekly. The daily uptrends are there. The weekly uptrend is there. Now I'll do the 4-hour uptrend, and just so it doesn't take infinite time, I will speed this up a bit. If something doesn't make sense, then tell me. Take the lowest wick. 4-hour is already chosen as the template. Can already see how good it worked initially before it got lost over here, then here, and here. Then this one faked out a loss, then counter pumped. A lot of people got trolled here for short and got pumped away. This one over here. And these are really the nasty ones. It closes exactly so much on the trend that it can then immediately reject on the backside off of it. Moves over to this one here, moves over to this one here. What do we get? This candle here. Whoop. That's a full hard closure, and yeah, picture perfect, right? So if you have daily, 4-hour, and weekly being married like this, then yeah, there are not a lot of questions why it keeps slightly traveling higher, right? And maintaining this until it actually lifts off. And it also actually makes a difference if price trend lines are like congested or on a very tiny range like this, then it obviously also works better compared to resistances that are divided like this. The weekly is here, the daily is here. The 4-hour is meanwhile here. I know it was here before, but then it got split up. So now all those resistance trend lines are all over the place, and price can move around more freely, do it like this, squeeze again, and then fly high, and maybe it goes a bit lower and then a bit higher, whatever. But for the idea of having all this support in one place, like that's your daily downtrend, that's your daily uptrend, and the weekly and the 4 hours nearby. That's a long, it even hits break level from here. If you didn't get your long here, the chance for having a successful long here, if price goes there, is pretty high. So good exercise to try after you have drawn it out, to actually then try to take the trade according to your own drawings. So that's the 4 hour. Now we have the daily, the weekly, the 4 hour, and these are only even the local trend lines, the major trend lines from the top, and the local from the recent lowest low. And how do I get to such a messy chart that you see on my first layout? That's then simply because I also add all the break levels. I will not do all of them right now because I'm kind of sure that not many of you want to have all these lines on their chart. But to understand how you simply draw them would probably already help to make your own decision if you want to have them. So back to the, let's say, trainee layout. So now you have all the trend lines, the major ones, not talking even local ones, not talking interior trends, just to have something going, because the question still was, and it's a very comprehensive answer to a one-liner question. Then you draw the break levels after you have like your major trends. And how do I do that? I use the horizontal ray. I go to the daily time frame first. Oops. Yeah, probably most of you know how you draw them. Similar idea as with trend lines. You take the highest and lowest prices from the wicks. If you're trying to draw like the resistance lines, then you're going by the distribution candles, and if you're trying to draw the support lines, then you're going by the accumulation candles, which looks in other words than something like this. So if we go to the lowest price point, we are not using this one because this is a distribution candle. We're not using this one, but we're using this one. So you put on the lowest price of this range creating accumulation candle formation. Actually also on the wick, not on the body. It's very close, but important. You put the horizontal line here, and then you can pretty much do that throughout all this range to get a whole picture. And this would not even include any prior prices. So then your chart would not be as messy as mine. So this is for the accumulation candle. Then we have another accumulation candle. You draw not another line here because this range is already covered by this initial candle. But you have a change of direction in between here. So what do you know? On the next accumulation candle, you actually do it because in between there was a break of that direction.
So we have a new range here starting, and we put a new break level here. It's a single candle, so it doesn't count to have a resistance line drawn on that, but we have that over here. If when these two accumulation candles stopped and then start to have two distribution candles consecutively, then you actually start to draw a break level as resistance on the top candle or the highest price. And yeah, what do you know? Get self-explanatory as you draw those things out, right? It tried to attack this one, closed above, closed below, actually created another range of 2 candles, then 3 candles, tried to attack it again, is resistance, etc. But we have also 2 accumulation candles here. So I go there and actually also add those. Why do I do that? Because I believe not everybody will do it, but I do it actually to see the confluence to the right side. Imagine price develops and we are already 2-3 months ahead of that, sorry, and we are, I don't know, in March here. Then I can see that I have like 2 break levels, which have more confluence for how I approach the trades. Technically, it would not be necessary because this this break level here turned into an origin, and that would already tell you that it is very strong, and you could name that with templates and everything. Again, we will bring a video out about it and have a text on it, you know. Then you would know that it is pretty strong. For my personal charting with all the lines on top of it, I don't want all the labels here and then I can't read any of them, but I find a lot of confluence if I have multiple break levels in one place at the very tight area like this for myself. So more of a personal preference. I'm sure Sindotsi has it in his educational videos. So if you want to have it like framework perfect, then I'd say follow rather his explanations because he certainly knows better. I just tell you why I do it like that so that you can follow why I have those lines for myself. And also I actually add one here. Technically would not be needed because it's covered for due to this origin. But nonetheless, I see this break level and it gets me extra conviction that we get actually a rejection here when the 4-hour moves, have a break level here, short this thing. I don't need to hope for the best because I know it will reject. So, and I wouldn't probably be as confident if I didn't have that line, you know, and the 4-hour just moved, but I knew the origin was below and it can be used as support then. So yeah, to me those make sense. Maybe it helps you if you just name your origin levels, so the strong resistances and supports, and only add the break levels and give them a label, then also fair enough. So yeah, let's keep going. There's the downside range, new accumulation range started, so I add one here. Then it goes up again, single candle, nothing happens, single candle, nothing happens. Then you get 2 or more down candles, so you add another one here. Then it goes down, single one up, nothing happens. 2 go down. So what do you know? You add another break level and you can actually see how perfectly it keeps rejecting. And this is like absolute trading porn. You have that old trend that I explained why I held it. You have the break level from here. Those things meet. It hit the price. Bam. Instant rejection goes down by what? Almost $4,000. And yeah, the only challenge is to then trust that moment in time. And I guess that's a bigger problem for most people. In hindsight, it is like, yeah, obviously, now you say that it happened. No, it's also how we trade. You need to trust your charts. You have those lines, and then when the price comes here, after you have this drawing, you just short it. And then if it goes a bit above, give it a bit of wiggle room. You don't want to have stop loss immediately here or here because that's where everybody is. Keep it, let it a bit breathe. It's rarely ever that then Bitcoin will just do this whoosh and go $20,000 ups. Yeah. If you're not over
Hey,
leveraged
Blue.
and oversized, then just take those trades. Yes, please.
When you are, I've not used the layout in TradingView that you're using right now with the 4 kind of still all on the same screen. When you are creating break levels on the daily here, and you drill down to the 4 hour, and then the 1 hour, and then the 15 hour, assuming that this is going to be covered in the video that is pending to come out for chart organization. Do you have all these break levels on there? Like a 4 hour break level, 4 hour origin level, and do they retain from this daily in the same layout? So in other words, do you have all the same break levels all on the same chart? If you drawing them here on the daily and you were to just click the 15-minute, I don't know if that's how you do it. For example, they stay, but so would the 4 hours and the 1 hours, perhaps, if those are important to you.
Yeah, good question. I rather keep the monthly, weekly, and daily for the break levels and ignore the 4 hours. And I only add the 4 hour just in time when I'm like, okay, let me look at my chart, what's going on. Okay, I have the recent break levels of the 4 and 1 hour even then here. I add them and then I have a picture that is within the picture of the bigger picture, if you know what I mean. And then I have the just now in the moment picture of the 1 hour and 4 hour for each break levels. But then when I have an idea of what I'm waiting for, where I want to put my alerts or next trade or take profits and whatever, then I just deleting them again because otherwise it gets super messy. So the chart you've seen before is basically all weeklies and dailies break levels, but then also all the way over from here. And I'm not doing that right now because either you can use that as an exercise from what I just explained to help yourself how to get to all those resistances over here and actually use the whole range. So I really took the full thing through those simple rules of 2 candles, same direction follow into one direction. And yeah, but if you're just starting out and want to have an idea of the running range, you start with your trend lines, then you take the break levels or origin levels just from where we are in this rectangle sideways box. And then you already get a very good idea, right? So one immediate idea you get is, okay, we better hold all those uptrends. We really don't want to. Oops, sorry, just a second. My mouse cursor was staggering. You really don't want to have like daily closures back below here because then you would already open below the daily trend. You would attack the weekly. The 4 hour, okay, is then the other anyways attacked by the daily. And then you could do something like this and get your first hard closure of the daily, right? And it gets even worse if you go down here and then start rejecting and then do something like this. And then you can see how sometimes from video to video when we've been in the top range before the fallout and yeah, compared to other people that said they knew what was coming, we knew what was coming and called the crash were coming and shorted it. And then what do you know? It crashed. That's how you get to those comments and those ideas. If Sindot was for 8 days on the 2500 timeframes he's watching, is like, oh, this is bad. This is really bad. Oh, this is really bad. And then the next day is, okay, this is even worse. Even though price never fell out, then it is because of the reason of all those closures are in their precision of how they close super relevant, you know. To most people, if the daily closes below here, or let's say below here, to them it's a nothing burger, and maybe it will not be in our case too, but for the purpose of the idea, what I'm trying to say is, if you don't have this picture and know what you're drawing out, then to you, this would be like, yeah, whatever, price is just revisiting all of this here. It doesn't matter at all. But actually, it does kind of matter because it would lose the daily trend. Yes, it can move, but it can also close exactly constantly below that new trend and do then the stepping down, and then and you are like, okay, yeah, it will pump probably soon. Price never proves to actually want to do this, and the sooner you see those things, the earlier you can make the best calls of what's going to happen. And that's why it's so important to act so precisely with those the super thin rays, instead of like most YouTubers have like this fatty trend line, and in the best case it's even fattier. I don't know, where is it? Here, like this one, and then they do like this. Oh, we have an uptrend. And then they are like, yeah, let's see what's happened here, and then blah blah blah. That's, yeah, but the big money algos are not working with like some fat ass, I don't know, high calorie trend line. They are high precision mechanisms. Probably the most efficient machine in the whole world is the market. So it is super relevant. Super relevant. If the daily did close here or here, it is in fact super relevant, and that's why the daily did not close at 94 basically, 94, what is it, 94.31, because that would close above this break level. No, it closed below, and most people would not see this if you would have like draw whatever out. And that's same for the trend lines, and trend lines are probably the most complex thing because they combine price and time, or price over time. Break levels are a bit more easy, and you've probably seen, if you read more about charting techniques and what are people personally doing, then I'm 100% sure you have heard from a lot of people that say, yeah, I'm just sticking to horizontal levels. And I get it, because it's as raw as price can get. And if you do that, then you would be super fine of just shorting this. But you would have not gotten the confluence of this laddering up slowly just by the break levels alone, because as you can see, it has never touched them again down here. It shot through it because of that narrative of the Japanese rate hike and how bad it is, and then everybody shorted, it pumps and finds support at all the trend lines and never visits that break level again. So, in my opinion, doing both and exercising both actually, even if it's a bit much at the beginning, I get it. It's not super easy, it's not super trivial, but that's also why we're almost 7 days a week there in the chat. If you have questions, just shoot, share your chart, and be like, yeah, is my trend line right? Is my break level right? Where does it go? And you will find a lot of people who are happy to answer. So yeah, let's add maybe the weekly for the sake of completion. Completionism from only this tiny range here, to get an idea how you could organize your own chart in that single case at least. Oh, that's a good one. That's a super doji. And I'm immediately checking right now if on the other chart that's also an accumulation closure or an indecisive one. No, it's also an accumulation closure. So that's good enough for me to say, okay, that's the whole range. We actually have 2 consecutive weekly accumulation candles. So I'm adding a break level here, and and then even change the text on it and name it. Because obviously monthly is stronger than weekly, weekly is stronger than daily, daily is stronger than 4 hour, and so on and so on. So if you have this extra piece of information on your chart, that might give you again, and that's all about conviction at the right time, that might give you then very good conviction to, what do you know, long the weekly break level. Like you had almost how many days? 5 days to long the same level basically. Shot through it to take out all the stop losses. Also super simple and basic. But if you're not 100xing this shit with all your retirement money, then you should not sweat over a little spooky dump through it. And yeah, it held the trend lines, hit the weekly break level, hit even a daily break level below, swept that also a bit. Yeah. That's a long, that's a short. Price goes up, price goes down. And can only recommend to exercise those things. Now you've seen it, how I did it on Bitcoin. I would recommend doing it on Solana. I know for some reason it's some super favorite coin of everybody. Turn it to a favorite trade, but there are so many assets. Maybe you try something fresh, something that Sin didn't mention yet. So you have no bias for your own chart while you're exercising. And then you can do this ugly old shit like ETH for exercise only, not for trading purposes. Do whatever you want and deem right. But yeah. Yeah, add a break level here. Add a, here's none, but add a break level here. And then go through all the range, do the same with the trends from the top. Just how I explained on Bitcoin. And then see what you got. All right, I guess, oh my God, that was almost 1.5 hours for one question, but it's a very, very comprehensive one. I could actually talk 20 more hours. So yeah, let me check the chat.
Good looking out, Blue. Always appreciate you. It's good to hear you.
Yeah, thanks. Good to you too, man. Oh, you guys were super chatty. I'm sorry that I missed all of this. The best option for a newbie. Chinese level, I cannot tell you. It's perfectly fine if you take the free plan first or the essential. If you have the money, I would always recommend premium, but not right now because there's no deal running and you're just wasting money. So go with the free plan, get some vibes with TradingView, and then see if you get a deal in 2 or 3 months whenever they are getting those 60 to 80% discounts. Otherwise, you're just throwing money out of the window for no reason. Or I don't know about your folio and bank account. If you have it anyways, buy Ultimate for all I care. Do whatever you want. If you need it, is another question. You're probably good with the freemium and then essential at best. I don't think you need plus or premium very soon. Could you expand on why the candles are off by a few cents? Arley is asking why the candles are off by a few cents. That's simply how the order books are managed. The price feed we are seeing here, it actually goes down to the 1 second chart even. I'm not zooming in right now on a 1 second because otherwise I will get an epileptical attack. But if we zoom in even on the 15 seconds, you can already see like there are a bunch of gaps in between those candles. They're totally normal. It's because there was no liquidity at that price point, and the candle only reflects the price, the liquidity in the order book of that price feed, of that exchange, of that particular pair at that moment in time. So right now, if we would log in this price, there's at the moment the orders and the order book and the liquidity agrees that there is amongst the spread between buying and selling, that the average of the current price is what 3,140 and 55 cents. And when this liquidity in those orders changes, because algos and people shuffle their orders around, then the price moves like pew. If they all move the liquidity down, there's like no buying anymore and all the selling orders go down immediately, then the candle will jump down here and then you will get a gap. And the faster this happens, the bigger the gaps you get. And how it perfectly works to the absolute last detail of technicals, that it is then also shown on price feeds of exchanges that don't have a clean order book. I cannot actually perfectly answer that. I just know that somehow they didn't manage that for the rollover. They didn't lock in because, you know, the 50-minute, when it closes in this example in like 13 minutes and 50 seconds, then the exchange has to send an information to TradingView or to the API to terminally say that's the locked in price of that 50-minute closure, and we feed it like that, and that's how it is. I guess they tick in 1 minute actually. That's what they sent out to their APIs. So they would have to lock in a 1 minute closure, and then TradingView converts it basically 15 1 minute closures of 15 1 minute candles are converted into a 50-minute candle. But for this to be clean, the exchange and its order book would have to send out a clean data set to TradingView, because TradingView can also only send out to us users at the front end of this tool what it is self-getting from the exchange, because, well, you know, it cannot make its own decision and just claim it knows better than what the exchange is sending it. So if the exchange is sending a different opening and closing and opening price to TradingView for the candles in between, then it will also display it as badly as they get the information. And usually BitGet and Binance tend to have the cleanest data feed and order book in that regard. And also because of the highest liquidity. Ironically, it can happen that in that 1 second between the rollover of this closing candle and this opening, that exactly in that second, the liquidity changed as much that the candle would move up here. But for some reason, Binance and BitGet, yeah, I guess they just have a better machine and backend that they clean out those displacements and have clean closures. And since the lines we draw out and we have on the charts then do what they are supposed to do, there's like a self-fulfilling prophecy of you don't need to doubt, are your perpetual mixed contract feeds like we have them here, are they then reliable or not? Well, they are constantly, so trying to doubt it or not doubt it doesn't make a lot of sense, because it works. And if you try to chart the other charts, you actually see how a big difference in how precise your outcomes of charts will be, and or how imprecise, sorry. It's like highly probable that the imprecision of your charts on the other data feeds will be very high, and then you take like bad trades because you thought, I don't know, I don't have an example now because I didn't track that recently, but let's say this is your trend here, and on the other data feed this candle would be above it, and it actually sits here, right? So you would have it here on the bad data feed, and on the good like here. So that's a huge difference in how you act upon this line, right? Because here this resistance and it could fall out and keep falling out. And if it's on the other one, okay, in this case it is a bit support and there's support again. But yeah, it's just a precision thing and could actually cost you a lot of money if you have then the conviction to take the trade on the line. But the line doesn't exist because the data feed is shit. I hope this makes sense. So give me a second. Okay. Going through the chat. Thanks for sharing, Eclipse Nova. Yeah, take as many notes as you can, Chinese Devil. It doesn't get better. You're only starting to learn. It's not the end. Don't forget that. I still learn every day. So better catch up. Do you add trend lines on higher time? I already answered that, Kevix. If I add trend
Yes,
lines on
sir.
higher time
Yes,
frames.
sir.
What, we are moving into the 12-hour short, says Biddleton. Let's check on this. Is that right? What do I have here? Ah, yeah. Yeah, that's a bit worrisome. Actually, very, very nicely distributing at the golden pocket, but despite that overall view. Ah, yeah, that's a short. It's also a very fully developed range. You can check to zoom in. It hit the entry, obviously. Let's check if it already hit the exit. No. So yeah, that's a valid short for sure. You would probably then check if there's a trend line in your way of your exit. Even locally, if you have like a 15-minute uptrend like this, moves over here, over here. This one, I don't know. It seems like the corner is touching. Yep. Here, over here. Okay, so this is an uptrend. So you could short it, but this even local 15-minute uptrend is in your way. And if they want to fuck you over, then they will just use it as a bounce of this break level here and go higher actually. Or from all the support over here or here. So eventually this will hit. Obviously, the bear market lows are much lower than this. But if you're on a scalp, can work. What would be easier if you want to take this short or not? If you ask me, this is obviously the main local trend at the moment, not drawing out anything else, not knowing anything else at the moment, just by the single trend line, the single scalp. If price goes below here and tests this uptrend after losing it from below and then hitting the entry, in my opinion, that would be the better short to then go here. Whoop. It's a bit of a sausage drawing. Whoop. Rather than trying to short against the uptrend that's currently running, if that makes sense to you. Can work, sure. It's not a super large range. Can also that losing this uptrend goes hand in hand with hitting the exit. You know how it is, right? I was saying if it consolidates here and uses this uptrend as an actual bounce for a bit higher, then that's what price want to do at that moment in time. But if you're not over leveraging, tiny position, set and forget, then you're as good as the bots that we have, you know. It just enters that short and waits for the exit and doesn't give a fuck. So there's non-activated ones we can see, but there's moves between. Yeah. Then a SYN chart in between. With yeah, how he has drawn out the full range of trend lines. Yeah, Chinese devil. Yeah, I believe that it feels like you're watching a sci-fi movie. It's pretty crazy. It's art as much as it is high precision framework and knowledge actually, and applying those, and then weighing your risk against your reward. Get as much confluence into a trade as you can have, and then take it and then make money eventually after losing plenty of times because you're still learning, and that's part of the process. Let me reread that Eclipse Nova. From what I understand, there might be some displacement or variation depending on where you choose to start the local trends. I think these locals are more of an approximation to simplify finding the trend. But the top accumulation or bottom distribution range may not also be exactly the true trend, starting from the beginning of time, average from the higher time frame. Yeah, that's right. So what you're basically saying is, if you're just on like the example I just had with the 50-minute trend, that's what I said, not knowing any other context and only taking that trend that we have had. That's an uptrend, yeah. But you don't have like any resistance of break levels. It's just a 50-minute. You don't have 4-hour trend lines. You don't have dailies, weeklies. And if you're just scalping and taking like the 1-hour range and draw that out, there's like no other information. That's why I said, without going too deeply into it, even now, still be careful if you take it, if you didn't take it already, because it was the entry and you're already in. Maybe you would partial TP on the trend line, add it back on hitting it, and then see if it squeezes into this trend and falls out. But yeah, exactly like you said, if you don't have basically if you don't have the full picture, then you can still start fresh without knowing anything and just scalp this range that you got here, or go back until here, and then scalp only this and see what you get. But having like the full picture is at least what I prefer, because the best 15-minute uptrend doesn't help you anything if you hit like a weekly resistance $1 above or whatever, you know. So I prefer to have the full picture even when I'm scalping. But fair enough. And the current move, you know, is also like not perfectly defined. We are kinda sideways. We were until 2 days ago in a local uptrend, but we are in a major downtrend. So what is the true move? Also, there are 720 time frames in each day, and then you have all the daily time frames, 1 day, 2 day, 537 time frame. There are so many time frames and only so much space on the chart. You have to make a decision eventually. And that's how I say, yeah, if you can come up with monthly, weekly, daily, and 4-hour and draw that out with conviction, then you're already far ahead of most people. You know, you're not randomly taking longs and randomly taking shorts just by the vibes of what you read on Twitter or what your best next YouTuber told you of up only or panic selling, whatever. direction they are currently screaming at into the camera. So what else do we got here? I've had some difficulty locating some of the hybrid tools. You have a GitHub page or something? Yeah, maybe you can just hit up Chargers Fan. He's informed Spindleton about all the dev stuff and the GitHub stuff. So just ping him, don't hesitate. He'll happily answer. He's always super happy if somebody's interested in the GitHub and dev stuff. So that part of our community is also growing, and he'll happily give you a hand to get you started. Yeah, glad you found us, Chinese Devil. It gets very addicting as you see through the matrix and start drawing trend lines and break levels that make sense. Then you reflect your last years. Why didn't I do that before? There are two answers. Because you didn't try, fair enough. Eventually people try and then they find out. So nothing bad about it. But also to be fair, and I don't want to be like cheering ourselves too much, but to be honest, there is like not a second, bunch of people with that trading or charting knowledge, let's say, for that precision and all those weirdo time frames, and just getting also better ourselves day by day, you know. So yeah, I've went through a lot of YouTubers also when I started out a couple of years ago, and can imagine how much shit I've filtered out ever since. And I only watch like 2 or 3 guys every now and then, because they are legit. They know what they're talking about. But even then, mostly all of them talk about the same stuff. None of them use like as precise charting with those raise and breaks levels because they don't know, and that's fair enough. How can they explain something that they don't know? So not talking them down, they have other values, and I still like watching them. For general statistical take charts, that's very helpful because we don't have those things running because don't need it, but for my own confluence on taking larger positions, I like to know that because some moving average on the 5-day crossed over like 4 closures ago, that Bitcoin has a 100% chance of revisiting 83,000, you know, and it didn't happen yet. I like to know those things. I know Sin.C doesn't need it, and I know that our framework doesn't need it, but I myself like to know those statistics, and that adds confluence and value to my daily charting. But I would not add a trend line or a marker or whatever onto how I draw my own chart for the current swing trades or scalps that I'm actually drawing out. So I just have all those numbers in the back of my mind, and well, you know, bear market is here. It's just a question of when we are rolling over into a new low after the dead cat bounce completed. So, yeah. So I don't need another 100 YouTubers telling me about moving average or a channel or a falling wedge or rising wedge or blah blah blah. It's all imprecise bullshit. And when the moment you find out, you can never unlearn, and you actually don't then want to listen to other stupid shit. So yeah, a lot of chatter between the guys of you. I don't see any further questions here. It's already 12 at my time. I would give you guys a couple of minutes if you want to shoot out something. I have some coming back of a specific that I just explained earlier. It was basically one major question. I didn't think it takes me so long to draw it all out, but I wanted to explain it as good as possible. Maybe we can throw another question in there. Yeah, big tree, small x kind of had a similar question in Fireball also. They asked when setting up a chart, how do you pick your start point? I guess I explained that earlier. And big tree, small x asked, how do I know which candles to use for drawing trend lines? I guess I covered this. If not sure, Biggie, then please hit me up and ask again. When the next stream? The streams are every Thursday, obviously throughout the holidays. It was exactly at Christmas and then exactly at New Year, so there was no live stream. Also no possibility for me to do a live stream and actually say good things and not just talk drunk into the microphone. But other than that, every Thursday at the same time, we have the live streams. So this is the first one in the new year. And we're also uploading them since I'm recording everything. And so one-to-one upload, no cutting, no post-processing, just raw. As you've heard it, everything today. So people that cannot join today do it to their own schedule, or yeah, simply because they are sleeping. We have a 24/7 community all around the globe, and yeah, this time slot coming from a questionnaire turned out to be the most viable one. We didn't want to do it on the weekends. We don't want to do it on Monday and Friday because that's also where price fakes out a lot. So the options were Tuesday, Wednesday, and Thursday. And then from the overall, yeah, asking around what fits the best for most people, turned out that Thursday was usually the best time frame. And yeah, that's how it started. And now it's every Thursday, 10 p.m. my time. So that's UTC +1. If you're from the USA, then if that's New York time, is that East Standard Time? 6 hours back, so that's like 4 p.m. then for you, I guess. Something like that.
It's meal time for me. Thanks again, as always. Appreciate hearing you. Appreciate all the info. Have a great one, brother.
Thanks. You too, man. Thanks for coming. Thanks for listening and throwing in those questions. So, I guess if nobody comes out with the question, I don't know, chat, is that addressed to Sindot or to me? You. Yeah, how do you balance trades out? There's no received answer to that. I'm sorry. It's a lot of stuff in trading is actually experience and exercise and trying and find out how it works the best for yourself. I don't know shit about your personal finance, about your account size, about your position size, about your risk appetite. So personally, I can do both. You know, I have a long and a short running at the moment. So why not take both if you can sit it out? As a rule of thumb, at least try to find the major trends that are in play and see, or even like at least the major local downtrend, if you know what I mean. I mean, you follow for a long time, so probably you know. At least try to find those major boundaries and then see if the exit of either or, let's say if the long exit has a couple of trend lines in its way, then you probably don't want to take it. And the same for the short. If the short exit would be far behind the running uptrends, then you probably get an even better short entry and keep the exit in mind. And then when the price actually rolls over, then you take the same short just from much higher to a much further down price because you know it didn't hit the exit yet. And that's a bit how I play it myself usually. I try to play with the trend. So the major trend is down. So despite some small exceptions, time-wise, I'm never going bigger in long than I am in short because the overall macro downtrend, and despite the economy being fucked and Japan will raise hikes again. Will hike rates again, and USA not cutting rates, and Trump throwing bombs left and right and doing whatever he wants. There's not a lot of conviction to oversize your longs, at least not for my risk appetite and how I play my account. So if I long, then I most likely have a short already running that is hedging me, and the long that I take will be under the size of the short. So that maybe gives you an idea. If it's not like a super obvious dump bounce, because I play those and then I might not have a short hedge, but then I'm also not taking like decent sizes, you know. If there's on the 5-minute or 15-minute or 1 hour, like a very rapid drawdown, then you see huge volume coming in, then you see a bit of support building on the 1 minute and 3 and 5 minute. Okay, I long that, I exit on the first bounce and resistance I see, and that's it. But if I play a sized position, a larger position, and you try to do that with your 12-hour and 2-day or 4-hour or daily or whatever specific you're asking actually, then I would not go with large capital into longs without a short, and then I maintain those. I actually try to just trade up my short as a general short position for the rollover later. Unless we get like a super rapid dump, then I just fully TP it and wait for the bounce, you know, and then build a new short. But if we're grinding higher, as we seem to do at the moment, then I will just partially in, partially out, and that way the short entry over time travels up, and on the lower end of the price on the range I have a long that is hedging me, so I can even grow the short size a bit because I'm not afraid that we will go above 108k, you know, not even 100k if you are really asking me, but if it does sweep 100, 101, 104 as the maximum, I don't know, then who gives a fuck? Then my P&L is for a brief moment in drawdown, and if I still have room, then I will add and average up the entry and take it out at the entry again and repeat that until we finally roll over and have the long on the lower end and set a stop loss there. That's how I personally play it, and just some minor scalps of FIB entries and exits in between. I don't know. I hope that helped. Comes always back to all the things I said. Experience, what you want to achieve, account size, risk appetite, position sizing, basically everything. So too complex to say, yeah, that's how I do it every time, and that's how you should do it every time, because that would not be like super honest. Ja, genau. Schlong all the way. Schlong. Long, long, Schlong Silver. All right, all right, all right. We're going for 2.5 hours now. I appreciate all of you. I give you 1 more minute. If you have a random question about anything, shoot it now. Otherwise, I would wrap up the recording and the stream right now. You can also ask me about my favorite color or favorite dish. Doesn't matter. I'm an open book. Favorably asking about charts or anything. Yeah, you're welcome, guys. It's always a pleasure. Let's say almost every week. There was a bit of holidays and everything, but you know. Not my cat anymore. It's yeah, unfortunately, it's already in cat heaven. Ironically, I'm more of a dog person, but I like that image so much. That's super happy. It represents my own attitude the most. That's why I have it. It's like super smiling into the camera on that snap, and I like it a lot. So yeah, super cute. All right, guys. Then have a nice evening, or have a good night, or morning, or wherever you are. The planet, always a pleasure. Thank you very much for coming. And stop the recording now. And oh, then see you next week, latest. Bye.